welcome. You're watching NDTV Profit. I am Mahima Vajrajani. Well, today's focus is the QSR segment. We've seen that the stocks have not done much in the past 1 year because of the high valuations. Plus, we've also observed that there is slow demand in terms of the QSR segment. The consumer demand remains to stay slow. But going forward in FY25, what are we expecting? What will be the demand trends be like? Let us find out. And to discover this, we have with us Mr. Abneesh Roy, the Executive Director at Nuvama Institutional Equities, who joins us now. Welcome to the show, sir.
Thank you.
Right. My first question to you is that, the QSR segment has seen a slower demand in FY24. Now, going forward in FY25, what are your expectations in terms of the overall demand for the QSR space?
Yeah, thanks. Yes, near term, I think the slowdown will continue. We have seen QSRs facing slowdown past 5-6 quarters. I would say that the trend reversal will start essentially from the Diwali quarter. So Q3 FY25 is where we expect meaningful recovery. So the current slowdown, if you see the reasons, remains the same. There is a hyper competition because the QSRs have been expanding very fast. There have been local players, there have been unlisted players also funded by startup capital who have entered pizza, who have entered burger and all other kind of formats. Delivery is still doing well, but the in-store dining, if you see, remains challenging, and in Q1 because of the overall very harsh temperature and because of festivals mismatch here and there. We do see that in Q1 also the in-store dining format remains a challenge for most of the QSR. So on your point on valuations being rich, and that's why stocks have done a bit weak, I don't think that is the reason. Ultimately, if you see, the stock markets are currently quite buoyant, hitting new highs quite regularly. So I would not say that valuation is a concern. It is more of growth being a concern. So if you see Pizza Hut, the numbers were really weak in Q4 and a bit earlier also. On the other hand, if I see pockets of good performance, I would say Jubilant Foods in the delivery format or Domino's, there they have seen decent performance in the current scenario. So if I see why is the slowdown happening past few quarters, essentially apart from competition, there is the overall job market in the tech sector and startup that has been weak, and there has been salary cuts and job losses also in some of those sectors. And one more thing is, with high interest cost, definitely the home loan, etc., EMI, etc., that also takes away more of the disposable income. So it's a mix of all this.
Got it. But so like you said that the dine-in restaurants are facing some kind of pressure day in and day out, but still, these QSR restaurants are expanding their stores, like Domino's. Jubilant Foodworks just completed their 2,000 store mark. So then what is the strategy exactly behind, increasing these stores rather than just increasing their e-commerce delivery?
Yes, I would say that this is being done more from a longer term perspective. Companies do expect the slowdown to ease end at some stage, and generally store addition is done from a 10-year, 20-year and even longer time frame kind of a scenario. So companies don't stop growing when the slowdown is there. Otherwise, then the lead time will be there and the competition could step in. So it's a that peer kind of a pressure also which is there. So I would say that currently the slowdown is there because of the hyper expansion and because of the macro factor which I mentioned. But definitely when Domino's says that they see 4,000 stores as the universe in the medium term, that again they take the data from China. China, for example, some of the QSRs are so big, and when India's population now has beaten China and India's GDP growth rate is higher than China, medium long term there is no problem. It is just the short term issue which has been there unfortunately for almost 6 quarters now and may continue for 2 more quarters. it is just a short-term time frame, but longer term, I would say that definitely 4,000 stores for Domino's and for other QSRs, similarly much higher numbers, doubling, tripling over a 5-10 period. I think that's doable in my view.
Got it. So, do we expect a recovery for QSR in second half of FY25? Is that what you're saying?
Yes, that's the hope currently, but companies are taking proactive steps by making it better value to customer. For example, Domino's is waiving off the delivery cost in a lot of the cases. So companies are trying to offer more value to customer, more innovation, more promotions, etc. Tie-ups with cricket. Now, if you see, Devyani has done a tie-up with PVR. I think that's a very interesting thing. So yes, it will be based on all these steps.
Got it. And Mr. Roy, recently in the GST Council, it was suggested that the corrugated boxes, the GST will be reduced from 18% to 12%. Now, a lot of these QSR space who are doing well in terms of e-commerce delivery use these corrugated boxes. So it is one of the raw materials. So do you think that this lowering of GST from 18% to 12% will have some kind of good impact on the margins for QSR?
It may have some impact on gross margins, but currently the endeavor of the companies is to get back volume growth. So I would say that any improvement on the gross margin side, mostly it will be flowed back towards better value to customer. So yes, at the EBITDA level, it may not have much of a impact. At the gross margins, maybe some benefit could be there, but ultimately for any QSR, food costs are the major cost, not the packaging cost.
Understood. Understood. And Mr. Roy, I also want to understand that, to bring back volumes, do you think that these QSRs will take any kind of price cuts going forward? And if yes, in what range of percentage do you expect these price cuts to be?
The price cuts is never the right way to get back volume growth. It has to be more innovation. It has to be tactical promotions, because if one company does price cut, then the profit pool of the industry comes down and the customer demand may not increase at all, because customers just feel that everyone has cut prices, so why should I increase my ordering? So price cut is never the way for getting back volumes. It has to be uh, uh, a very well thought out process, I will say. So it will be a mix of innovation and offering promotions and discounting, well thought out. It can't be a blanket price cut. That never works. And then it could have a big impact on profitability. And then getting back that pricing becomes very tough. So I would say that no, that is very unlikely.
Understood. Point taken. And, in terms of agri products, we've seen that the raw material prices have been increasing. So, going forward for all of these QSR companies, do you think that the margins will take a hit? And if yes, how much of a margin hit will they take?
Not too early to comment on that, because the monsoon season has just started, bit delayed currently, so we'll need to watch out what happens there. If it is a good monsoon, then a lot of these raw materials, the quantum will be good, and then the inflation will not be much of a concern. Plus, we have seen that overall it is more a case of demand challenge currently rather than a gross margin challenge for most consumer companies. So yeah, I would say that we would need to wait, but I don't see inflation as being the number one concern. It is more a demand which is currently a bigger concern.
Got it. And lastly, one last quick question in terms of valuations. Where do you see the value right now in QSR stocks, and your top 3 picks in the QSR space?
So I would say that currently what we are seeing, the Jubilant Foods clearly seems to be expanding quite aggressively. So when that recovery happens, they will be gaining. Plus, as I said, they are a delivery focused format, and there the growth has already come back. So yes, they seem to be better placed, and definitely we are seeing Popeyes also. Long-term value creation is possible. They have added 10 stores for Popeyes, for example, uh, in the previous time frame, and we do see that would accelerate to 40 to 50 stores definitely in FY25. So that looks interesting in case of Devyani, Pizza Hut is a challenge. So there we are clearly seeing that Domino's seems to be growing faster. So Domino's is taking market share. So that part of the business is challenging for Devyani. So currently, valuation wise and recovery wise, I would say that Jubilant Food looks a bit better. But as I said, because 6 quarters of slowdown has happened, so whenever the recovery happens, say in Q3, you will see that overall pack should start doing well because of the underperformance.
Got it. So Q3 is where we are expecting recovery in the QSR space, and Jubilant remains your top pick. Well, Mr. Abneesh Roy, thank you so much for taking our time and speaking with us at NDTV Profit. It was a pleasure speaking to you.